All right. Good morning, good afternoon, depending on where you're tuning in from. Welcome to this week's special mobile coaching session. My name is Patrick France, Senior Instructor here at VectorVest. Glad to be with you all. Hopefully, everybody is doing well. Good morning, Jay, Senior, the first one chiming in. If you guys can hear me out there, let me know in the comments or in the chat. We are live. We should be live at least on both Facebook and on YouTube. So if you guys can hear me out there, let me know in the comments of the chat that everything is coming through fine for you guys. Once we have confirmation of that, we'll go ahead and get started. And while people are coming in, once again, welcome everybody. If you're not familiar with what this is, every single Thursday we go live here on both Facebook and on YouTube where we talk about the VectorVest Stock Advisory app. My name is Patrick France. I've been here at VectorVest for coming up on 11 years now, actually 11 years as of 2 days ago. So yes, I've been here for quite a while. I enjoy what we're going through with VectorVest. I've been using VectorVest before I even started here. I picked it up from my father. So I've been a VectorVest believer for quite some time. Hey there, Mike. Hey there, June. If you guys, I take it you guys can hear me out there. So I'm going to take that as a good sign that everything is coming through fine for you guys. And so talking about today. Today we've got a little bit different of a session here, if you will, or different live stream, if you will. What we're going to be looking at is instead of just individual stocks or individual trading plans, that sort of thing, we're going to be taking a step back a little bit here today and focus on the bigger picture of the overall market. This is something that is very, very important, especially for individual traders out there, because you need to know when is a good time to be getting in, when is a good time to be getting out. You also need to know what conditions of the market you're trading in, so that way you can adjust your plan accordingly. So we're going to be focusing on the bigger picture, but first and foremost, let's get started by taking a look at what's going on in the market here today, and then we'll dive into our topic. And as always, at the very end, if you guys have any stocks that you want to take a look at, make sure to stick around till then, and we'll analyze them at the end. And show you how fast actually we can analyze our stocks on the go with the VectorVest Stock Advisory app, and show you how we can analyze any stock out there in less than 10 seconds. So if you guys are ready to get started, are you guys excited? Make sure to hit that like button. If you're on our YouTube page, make sure to subscribe to the channel if you're not already subscribed, and let's go ahead, jump right into it here today. So starting off at the very top center, looking at the market timing gauge. As we can see, we are one tick into the red, therefore the color guard is mildly bearish, and VectorVest does not advocate buying any stocks at this time. We still remain in that situation. We've been in this situation for a while now, but what we're going to be taking a look at should hopefully ease some of those fears and help give some guidance for anybody who's not already a VectorVest subscriber. Make sure we give you some guidance that will help you out for managing your portfolio effectively. So as we scroll down, we take a look at the color guard. And the color guard is where that market timing gauge gets its color from, is the top row of lights there. So there's three components that we use in our color guard, and this analyzes the overall market. The first and foremost is price, which is talking about the price of the VectorVest composite. The VectorVest composite is an arithmetic indexed average of about 9,000 stocks that we track each and every day. This gives you retail investors a better understanding of what's actually happening in the market, because it's not just looking at, the subsections of the market, such as the Dow's 30 or the Nasdaq's 100 or the S&P's 500, but it's looking at over 9,000 stocks right here in one simple to understand index for you. The second indicator is going to be the RT, or relative timing. Now, the relative timing is looking at the short-term price trend of the overall market. It's cast on a scale of 0 to 2. So anything above 1 would show the the short-term trend of the market is up. Below 1 would indicate the short-term trend of the market is down. And then the third indicator is the BSR, or buy to sell ratio. This looks at the overall health of the market. So it's taking a look at the number of buy rated stocks in a database and comparing it to the number of sell rated stocks in a database. If you're not familiar with VectorVest already, we give a buy, hold, and sell rating on every single stock that we track every single day, and we utilize that to get an idea on the overall market health here. So when there's more buys than sells, the buy to sell ratio would be above 1, which would indicate overall market strength. And then below 1 would indicate overall market weakness. So as we can see at 0.59, that tells us there are more sells currently than buys, or that there's overall market weakness still in the market. Then these three indicators are comprised to come up with the MTI, or the market timing indicator. Now this is going to be cast on a scale of 0 to 2 once again, and it's looking at the underlying trend in the market. So above 1, the underlying trend in the market would be up. Below 1, the underlying trend in the market would be down. So as we can see at 0.73, the underlying trend in the market still remains down at this time. And then we get the trend column, which shows two parts of the trend each and every day. Now the first part is looking at the short term, or what we like to call the primary wave. As we can see, it is down since the prices of VectorVest composite is lower than it was 5 trading days earlier. The second part of the trend is looking at the underlying trend, or the MTI. So as we can see, since the MTI is below 1, the underlying trend in the market is also down. Let's see, Josie is saying your sound is very low today. Anybody else having issues with the sound? Should I turn it up a little bit? Everybody's saying the sound is great, so I'm not sure. Josie, make sure your volume's turned up. I don't want to, blame it on that, but I don't want to blow everybody's eardrums either. Jim, if you didn't get the update, I'm not sure why. Haven't heard anybody else reporting that. I can definitely make sure it got sent out, but it sounds like everybody got that, so I'm not sure why you didn't receive that there yesterday. Good here, awesome. All right, cool. Just wanted to make sure. I didn't want to blow everybody else's eardrums out there. All right, so going back into it, we talked about the trend column, and now the final column here is the calls column, which stands for our confirmed calls. Now, our confirmed calls are our most conservative timing system here at VectorVest. They're our last signal we get to get into the market and our last signal we get to get out. So as we can see, we still remain in that confirmed down situation as of today. So therefore, right now, we're being patient. We're not going ahead and buying a whole bunch of stocks right now. We're just being patient, letting our stops manage our positions, and waiting for that prime opportunity to start getting back into the market, which we thought we were going to see something yesterday. But, if you really look at yesterday's action, we started off on a positive note and then slowly slid lower just to barely break even, slightly into green yesterday. So yesterday was a little bit of weakness from what we were seeing. But as always, if you ever want to see what's going on a daily basis or get an update on the market on a daily basis, make sure to check out the daily color guard report right at the top there. All right, so scrolling down, taking a look at the advanced declines. This is showing the number of stocks going up here today and the number of stocks going down. So as we can see, we're sitting at about 40% of stocks moving higher and 48% of stocks moving lower. And when we look at the advanced declines, we typically want to see a 2-to-1 bias in either direction. But right now, we do see some softness or weakening in the markets. So therefore, we want to see twice as many stocks declining than advancing. And as we can see right now, we clearly do not have that. And then looking at the major indices down at the bottom, the Dow is still up about 0.25%. NASDAQ's down almost a full percentage point here. S&P is down about 1/3%. VectorVest composite down about 0.4%. All right, let's see. Appreciate that, Drew. All right, let me go ahead, turn that up a little bit. Let's see, maybe that should help. I increased the volume a little bit, so hopefully that should help you guys out. I don't want to turn it up too much, but actually that still looks a little low. Let me turn that up a little bit more. All right, make sure my mic is working good. All right, so I turned it up a little bit more. Hopefully that should help everybody out there. All right, so talking about today's topic, we want to look at the overall conditions of the market. That's what we're going to be focused on here today. Typically, most of our sessions we focus on, some hot stocks to buy, how to manage those stocks, understanding charts, those sorts of things. Today, we're going to be taking a more higher level view of the market. So first and foremost, every single night, as we talked about before, we do the daily color guard report. For anybody not familiar with that, you're brand new, maybe you haven't watched it before. The daily color guard report is an update that we do for you that talks about what happened in the market today, what to expect for tomorrow, what news you need to be aware of, and how to prepare yourself for the next trading day. In essence, it's going to make sure that you never get caught off guard with what's going on in the market and make sure that you stay on top of it. Now on Fridays, we do a more thorough, detailed version of that video, and we cover more aspects of the market, not just, the day-to-day information, but also the bigger picture of the market as well. And it's extremely important that you watch at least on the weekends on that Friday report, because there's a lot of useful information that can really help you stay on top and make sure that you never get caught off guard, especially with where we're currently at in the market. And today is going to sort of emphasize why that's so important. So if you want to get the text version of that video, as always, you can go to the VectorVest views here. You can choose the Friday's report, and the Friday's report is going to be a little bit longer than typical days. The DEW on the mobile app. So David, I did a video about it a few months ago, but you can add the DEW layout. It's not going to give you the up and down signals that you typically see on like the VectorVest 7, but it will give you the indicators. So if you know the rules of the plan, then you can get that information from the mobile app, yes. There should be some changes, hopefully coming very soon. I can't talk about it too much. I wish I could, but hopefully we'll see those changes coming very soon. That will give you guys more usability for it in regards to that though. All right, so once you get in here, you have a lot of information right here at the top, like our contact information, any webcasts or events that we have coming up, a review of the market. But if you want to quickly scroll through or get to the main points, tap on the pages in the upper right, and we're going to focus on the climate here. Now, the market climate is giving us the information we need to know what type of current market conditions we're in. Are we in a bull market, bear market? If we are in a bull or bear market, what point of that market are we currently in? You know, are we at the beginning of a bull market? Are we in the middle stages of a bull market, ending phases of a bull market? And just the same for a bear market. So I want to come down here and take a look at the information. You can get this every single week. We update it here for you. We can get the inflation data. So this is as of last Friday. Obviously, tomorrow being the next day, you'll see that update. To the most recent readings, I believe they were 7%, if I'm not mistaken. But you can see the current rating at that point was 6.8%. You can get the T-bill rates, inflation rates, earnings, which we're going to be talking about here today. And earnings is really, as we talk about, the main engine that drives the stock prices higher over time. So if earnings are going up, that means the companies are making money, and people buy companies that are making money. Now, if the earnings start going down, then that shows us that the companies out there are losing money, and that would indicate that people would be wanting to get out of them because they're not making any money anymore, and therefore now's not the time to be buying into a company that's losing money. So we see this data, but how do we really interpret that? Well, let me go ahead, switch it over here. Let me make sure. So, all right, cool. So this is a report inside the VectorVest 7 software. I'll show everybody how to get this. If you're on the desktop, you can get this as well. So you go into the views section, and on the left-hand side of the views, you have the special reports. And then down here, you have the Goldilocks scenario report that we're going to be looking at here today. And I'm not going to go through the whole report right now. You guys can take a look if you want to on your own. But the main thing I'm going to be focusing on is this chart that we have here. And it really gives us a clear-cut example or clear-cut guidance as to what type of market we're in. So as you can see, we have 8 different cases, and we have earnings, inflation, interest rates, prices, and then what type of market it is. And now these are going to be the main factors that determine a bull or bear market: earnings, inflation, interest rates, and prices. And so as we can see, in a bull market, all bull market scenarios, earnings are always up. So that is really the biggest factor of understanding where we're currently at in the market, is understanding earnings. This is why we stress earnings so much here at VectorVest. Oh, did it play a sound effect? I forgot about that part. I didn't think it would. Good, good call, Josie. I have the transitions on there. I don't typically jump into the VectorVest software and change the scenes too often, so that's why we're seeing that there. I do apologize though. Okay, so going back into it, the next factor in the market that determines bull or bear markets is inflation. So right now, as we all know, inflation has been rising. So either we're so far based off this information here, which is the beginning of a bull market, which I think we can all agree is probably not the case right now, or the other aspect here, which is the end of a bull market. Now, just because we say we're at the end of a bull market doesn't mean that the market's going to start dropping and we're going to enter in that bear market tomorrow. These endings of bear markets can last a while. They can last a year, 2 years, so on. So while we're, following we're following the data, we have to remember we're not trend predictors, we're trend followers. So we're not going to try to say, oh, the bear market's going to start tomorrow or 2 weeks from now. We're simply following the data and letting the data dictate what current conditions of the market that we're in. So we see that, okay, so earnings are up, inflation is up, interest rates. Well, interest rates aren't going down right now. They've actually started talking about interest rate hikes. That's what all the major headlines keep talking about, is how many rate hikes we're going to see this year, whether it be 3, 4, 5, who knows? But right now we know interest rates are on the rise, are starting to move up here. And then as we know, prices are up. You go out to the store, you go buy stuff, you know that it costs a lot more now than it did just a year ago. So since interest rates are up, inflation is up, earnings are up, prices are up, that puts us in a case for bull market scenario, which is the end of a bull market. Now, once again, don't take this as don't take this as a warning sign saying, hey, we got to go sell all of our positions and go buy contra ETFs, load our whole portfolio up with contra ETFs, puts, whatever. Take this as just being aware of the current conditions. We can still take advantage of a bull market while these conditions last, but once we see earnings start drifting lower, that would be that first indication that we went from a end of a bull market into the beginning of a bear market. So earnings will drop, prices will drop. This is something that, I don't see too many people out there talking about, and I've never seen anybody be able to quantify the differences of different parts of the bull market, different parts of the bear market, better than what we see here. Now, as always, I talked about that Friday's report. The reason why I talk about it is because we go over the climate graph and we highlight this for you so you don't have to do it on your own. Instead of you spending the time having to do that, you can find all of that recapped every single Friday in that nightly report. So just to quickly demonstrate, what I'll do is I will go to the graphs, pull this up, get this, there we go. And then what I'll do is I'll change it from stock to the market climate. Now, the climate graph isn't built into the mobile app, but once again, there's not a whole lot of changes. This only changes once a week, and it's covered for you every single week in that nightly recap video. So we'll scroll down or zoom out to a 5-year look back. And as we can see, the earnings of the S&P 500 or 50-day moving average of the earnings S&P 500 is still rocking and rolling here. But as we can also see, CPI or inflation is also rising. Right now, the inflation is not outpacing the rapid rate of earnings. So therefore, it hasn't really affected the earnings of companies too much yet. But once that starts to happen, that is when we start to become more cautious in our approach, and we start to be a little bit more hesitant on jumping on board with stocks, especially for the long-term investors out there. So this is something that I just wanted to point out. It's something that is useful no matter whether you're a swing trader, buy and hold long-term investor, no matter what type of traders, investor you are. Everybody can benefit from this information, and that's why I wanted to bring it to you guys today, because I do feel it's extremely important to know where you're at in the market, so that way you can make the most educated or most informed decisions for your own portfolio. All right, sold Tesla before the dip day. Not bad there, Steven. All right, so jumping back into it, let's get back into the mobile app. Now that we all see this, if you guys have questions on these indicators, feel free to ask. Morris is asking, what is the ETI? So the ETI is the earnings trend indicator. It's taking into account, all that we just talked about, earnings, inflation, interest rates, all of that, and putting it in a simple to understand VectorVest style indicator on a scaling of 0 to 2. So here's the 1 or neutral line. As we can see, earnings trend indicators moving higher, which is a positive sign that tells us we're getting stronger here on that. And that tells us that the inflation isn't outpacing the earnings. So therefore, it's not really hurting that or denting that sentiment so far. But once we do notice that starts to happen, we definitely will be alerting everybody throughout these videos every single week. Make sure all of our subscribers are protected rather than letting you guys get caught off guard. Now, this is something I noticed back, in the 2007, 2008 range. There was a huge influx of people into VectorVest after the fact. This is why everybody came in after the fact, because they saw that this was already telling us, we should be out of the market. We should be careful right now. And unfortunately, a lot of people missed out on that information. But so that's why I wanted to bring it to you guys now rather than after the fact, because, it's all great to go back and point and be like, oh, look, this was what we were saying at that time. But it's even better when you can warn people in advance. You can give that early notice and make sure people are aware that this kind of information is available to you. And so that way, those types of situations don't occur again. All right, so getting back into the mobile app, let's go ahead and jump back in here. Apologize for any of the noises again. All right, so getting back into it, once again, you can find a quick recap of everything that we saw in that graph right here in that Friday's report. So tomorrow, when the new report is updated, you guys can find an update of this information. We'll recap all the major headlines that have come through. For example, last week we had non-payroll coming in. We had jobs data coming in, trade balances coming in, and we'll highlight all of that information right here for you, rather than you having to go out and try to find that information and clicking on 5 different articles, or getting spammed with ads all over. Anybody in the Jockey Club probably knows what I'm talking about. You can find that information all summarized quickly for you, so that way you can get useful information rather than having to try to decipher a whole bunch of different articles, trying to piece everything together, try to come up with the same type of conclusions. If the Fed raises rates, is it a bad thing or a good thing? So the Fed raising rates it's a double-edged sword. It's bad for stocks because that obviously means that there's now more opportunities rather than just stocks. But at the same time, earnings interest rates are already so low that even a slight increase isn't going to say that their only way of or only game out there is stocks still. They still have to keep up or give investors a good enough return that makes stocks not worth it. So with rates already so low, it would have to take a little bit more than just 1 or 2 or 3 rate hikes like we saw last year, or like we hear about, to get them to be attractive to people, to potentially take their money out of the market and put them into those. So typically or historically, rising interest rates is negative to the market because it makes stocks less attractive. It gives investors another avenue of growing their capital or preserving their capital. But one thing to keep in mind, though, is now we have rising inflation. So yes, it's bad for stocks depending on how much they raise rates, but at the same time, we need it to combat that inflation, or else inflation gets out of control. So it's a necessary thing to raise rates to keep the overall economy in check and keep it in a healthy spot, that we don't turn into other countries out there like we've seen over the last 10 years even. So there's some positives and negatives, specifically just to stocks. Yes, it does typically hurt stocks when interest rates rise, because once again, that gives you other avenues to preserve your capital there. But then again, if interest rates are, let's say, 5% even, and inflation is 7%, those bonds that you're buying to get that consistent 5% is still actually losing money overall. So that's where it really, where it gets tricky. And that's the job of the Fed, is to figure out, where that medium is that makes everything that perfect scenario, if you will. How do you find last Friday's report? So if you're in the mobile app, Ted, all you have to do is when you sign in, you'll get the VectorVest views over here on the left-hand side. Or if you're on your phone, I believe it's at the bottom. You can always get it in the more section, or I think it says more in the bottom right, if I'm not mistaken. Once you're in the views, just simply click on the Friday's report. You can choose pages to go down to each category or each subsection. I chose climate to see that. If you want to see the video, it's on the market overview page, and you can find it in the daily color guard report. It'll be showing right here under the market guidance section once that report comes out. All right, so let's see. Any other questions that you guys have on specifically the overall climate of the market? Anything that you guys wanted clarified for or clarification on? I want to make sure, once again, everybody is aware that we are still in a bull market scenario. So when you see those fear headlines coming out saying, oh, the markets are going to crash, what's going to happen, this is bad, take a step back, see what it's actually saying, and make sure you check what the climate of the overall market is, so that way you can have a unbiased view of it rather than getting your emotions involved, because a lot of those articles out there are more fear invoking, and they're designed to make you more emotional, so that way you trade more, or you close out of a trade that could have been a good trade, or you mess up, you don't follow your plan. My app is not showing the market update video last night. It should be, Jim. Close out, reopen. If that doesn't work, give our support a call so they can, try to troubleshoot it, because I haven't changed anything on my app and it's showing here. So I'm not sure why yours would be any different there. Friday report on the computer. So the Friday's report on the computer can be found right from the home page first and foremost. I know it's going to play sound again. I apologize, but let's go ahead and show that real quick. All right. So if you're on the home page of the software there, Ted, or the program on the computer, it'll be in the strategy section. Typically, it's in the middle. That's where it's defaulted to. You can click on here, the report. I've already watched it, but typically it gives you the option to watch the video right here. If you don't have it here, if you've customized your homepage, you've not seen it, you can always go into timing, and you can watch the daily color guard report right there, or the special presentation, which would be the Friday's report right there. So hopefully that helps you out there. That the color guard report did not update last evening. Showing for the 11th. Mine's showing 112. Today's the 13th. Oh, in the mobile app, huh? All right, well, I will have to discuss that and make sure we get that updated there. I know that hopefully we have the old uploader back very, very soon. But we've been having to go through a very tedious process to get everything uploaded while that uploader is getting back up and running. Hopefully we should have that this week, though. I can't promise, but I'm going to be working with our dev team on that after this session here today. So hopefully we get that by tomorrow, or for this week coming up. All right. So with that, let's go ahead, jump back into the mobile app, and let's go ahead, start to analyze. Yeah, no climate on the mobile, no climate graph there, Femi, on the mobile app. But once, like I said, you can watch it on that Friday's report in that video. It updates once a week. So, being able to see it every single day isn't going to change much, because it only updates every single Friday. And as always, whenever that update comes out, we definitely cover that in that nightly video. So that way you can stay up to date. Or if you want to see just the raw data, once again, you can go into the views and then go to the pages and then choose the climate and you can get all that updated information every single week right there. All right, so with that, if you guys have any other questions, feel free to let me know. If not, let me see the stocks that you guys want to have analyzed, and I'll show you how fast and how easy the VectorVest Stock Advisory app makes analyzing any stock out there. I'm just going to pull this over so I can see the comments a little bit better here. Yeah, it did indicate the video link right there. All right, oil. Let's take a look. So ETF with this one. With an ETF, VectorVest makes it even easier than anywhere out there to analyze. Because with an ETF, it's not like a company that has quarterly earnings reports, balance sheets, that sort of information. So therefore, the fundamental indicators, the RV and RS, are always going to be pegged at 1. So therefore, your primary focus is RT, or relative timing. Relative timing, all 4 of these indicators are going to be cast on a scale of 0 to 2. Above 1 is good, below 1 is bad. So with an RT of 1.38, that tells us the short-term trend of this ETF is still up. So therefore, it is still favorable for the time being. Let's see. Make this a little bit bigger. There we go. All right. Oh, Rio Tinto. All right. So now we have a stock. Now we can do the full analysis. So starting at the first one, the RV. Now, the RV is looking at the long-term potential of the stock over the next 1 to 3 years compared to a AAA corporate bond. But to keep it simple, it's just simply the upside potential or the long-term potential of the stock. So above 1 tells us the stock has better long-term potential than a AAA corporate bond or a relatively safe investment. The second indicator is the RS, or relative safety. Now, this is looking at the consistency and the predictability of a company's financial performance. Since it's cast on a scale of 0 to 2, above 1 would show that there is good performance or less risk associated with it. Below 1 would tell us that there is more risk associated with it. So at 0.96, it tells us there's a little bit more risk than the average stock out there. Then once again, talking about the RT, or relative timing, it's looking at the short-term price trend of the stock. Cast on a scale of 0 to 2, above 1 the closer to 2 it is, the stronger the uptrend. Below 1 the closer to 0 it is, the stronger the downtrend. So at 1.36, that shows that the short-term trend of this stock is up. Therefore, overall, the VST, which is a combination of RV, RS, and RT, summed up into one simple to understand indicator at 1.30 tells us the overall stock is favorable right now. All right, let's see. BWA. Oh, BWA, clicked on the wrong one. There we go. I'm going to go ahead and do this. Makes it a little bit easier. There we go. All right, so BWA. Now let's go see how fast this actually works. BWA has good long-term potential, a little bit more risk than the average stock out there. So good long-term potential, a little bit more risk, tells us it's more of an aggressive play. Looking at the timing at 1.2 or 1.29 tells us it is in a pretty decent uptrend right now. So overall, the stock is favorable. ABBY. ABV, I'm assuming. So ABBV, good long-term potential, less risk associated with the stock. You're in a steady uptrend, so overall the stock is favorable. INTC. INTC, poor long-term potential, but does have solid fundamentals. So more of a conservative stock, so less risk associated with it. You have a nice steady uptrend. Overall, stock is still favorable right now. SBSW. So SBSW, good long-term potential, but does have a little bit more risk than the average stock out there, and a pretty strong uptrend right now. So overall, stock is favorable. BLDR. BLDR, good long-term potential, less risk associated with this stock. You have a really strong short-term uptrend, so overall, the stock is definitely favorable. Let's see. ENY. Good long-term potential, less risk associated with it. Decent uptrend. Overall, stock's definitely favorable. ASIX, good long-term potential, but does have a little bit more risk associated with it. The timing is really the one part that gets a little bit worrisome here. 0.98 tells us that it is starting to see more of a downtrend on a short-term basis rather than an uptrend. And as we always talk about, once you own a stock, timing becomes the most important indicator out there. So definitely be aware of that. Overall, it's a good stock, but timing is just not quite right now. Let's see. PFE. PFE, good long-term potential, less risk associated with it. You have a short-term uptrend. Overall, stock's favorable. Looking at US Steel. So US Steel, good long-term potential, but does have a little bit more risk associated with it. Decently strong uptrend. Overall, favorable. Let's see. Where is this graph you're looking at on the computer? So Ted, if you're in the graph, if you pull up a graph under the graph section in the upper left-hand corner, click on the word stock and select market climate in that drop-down menu. Apps, APPS. There we go. Good long-term potential, a little bit less risk than the average stock out there. However, timing is of the essence. At 0.34, definitely in a strong decline. Therefore, not the good stock fundamentally, but not the right time to be owning it. PRDG. So PRDGX, I'm not seeing that one here, and not familiar with that ending of that, the 5 ticker symbol there. So I'd be, Jane, I'm not sure where you're getting PRDGX from. NIO, poor long-term potential, a lot of risk associated with it. You're in a state of decline, so overall, stock's not favorable right now. ASOL. Oh. That back up. ASOL. Mark, I'm not seeing that one there. ASOL. Gold, GOLD. Looking at Barrick, poor long-term potential, a lot of risk associated with it. You're in a slight decline currently, so overall not favorable. The BAC. Looking at Bank of America, good long-term potential, less risk associated with it. Steady, consistent uptrend on a short-term basis. Overall, stock still favorable. Let's see. CVE. CVE, good long-term potential, less risk associated with it. You have a really strong short-term uptrend, so overall, stock is definitely favorable here. RIO. Good long-term potential, but a little bit more risk associated with it, so more of an aggressive play. Decent short-term uptrend. Overall, stock's definitely favorable. Let's see. CMC. CMC, good long-term potential, less risk associated with it, strong short-term uptrend. Overall, stock is definitely favorable. Do not see market timing choice in graphs tab. So when you're in the graph, in the upper left-hand corner, like where you can type in, right next to the bar, you can type in a ticker symbol. Click on the word stock and you get a drop-down menu there, Ted. And from that drop-down menu, choose market climate, not market timing. Let's see. EQQQ. Once again, ETF, so therefore your primary focus is RT. At 0.96, it is in a slight decline currently. Overall, not favorable for the time being. Extro, alrighty. Extro, speculative play, poor long-term potential, a lot of risk associated with it. You're in a state of decline. Overall, stock is not favorable at this moment. Let's see. NVIDIA, NVIDIA, good long-term potential, less risk associated with it. You're basically moving sideways right now. So timing, I would definitely be a little bit alarmed with or keep a close eye on. Overall, though, definitely favorable. BTCS, poor long-term potential, a lot of risk associated with it. However, from a momentum play, from a speculative short-term trader, day trader, this stock has a lot of momentum right now. So overall, stock is definitely favorable. Let's see. MNDY. MNDY, poor long-term potential, a lot of risk associated with it. You're in a steady decline. Overall, stock is not favorable. VALE. VALE, good long-term potential, but does have a little bit of risk associated with it. You do have a strong short-term uptrend, so overall, the stock is definitely favorable right now. The 4 color guard clocks. 4 color guard, and I'm not sure what you're referring to on the color guard clocks. Give our support a call. They can talk with you one-on-one, figure out exactly what you're looking for, and then they can help you out there. They can give you that exact one-on-one time to make sure they get you exactly what you're looking for. GRVY. GRVY, good long-term potential, but average risk. The stock is in a steady decline, so overall, it is not favorable right now. XOM. XOM, good long-term potential, less risk associated with it. You have a really strong short-term uptrend. Overall, the stock is definitely favorable. BRKB. BRKB. Good long-term potential, less risk associated with it. You're in a steady, consistent short-term uptrend. Overall, stock is definitely favorable. Let's see. GRNC, Generac, GRNC, or GNRC, I believe is Generac. There we go. Generac, good long-term potential, less risk associated with it. Unfortunately, the timing is of the essence. The timing is not right now. 0.44, it is in a steady decline. Overall, this stock is still favorable though. Just the timing is not the right time to be holding it. I remember this stock, we got into it when it was 80 bucks a share. Now, even with the sell-off we've seen, it's still at over 300. Wow, that's impressive. Take a look at GameStop. GameStop, poor long-term potential, does have a little bit more risk associated with it. Clearly a speculative play. Timing has been getting hit pretty hard at 0.23. It is in a steady decline right now. Overall, the stock is not currently favorable. But the fact that the markets were red just a little bit ago, and we're seeing this slightly in the green, that's kind of impressive. WST, good long-term potential, a little bit more or a little less risk associated with it, so really solid fundamentals. Unfortunately, the timing is off at 0.74. It is in a decline currently on a short-term basis. Therefore, good stock, just not the right time to be long in it. Safe bulkers, this was from Brian. What's the symbol there? Let's see if we can find it. Safe bulkers, SB. Okay. So good long-term potential, but does have a little bit more risk associated with it. Timing is just a little off right now at 0.71. It is in a steady decline. Overall, it's a good stock. Just need the time to pick or timing to be picking back up a little bit. GGPI. So GGPI, poor long-term potential, a lot of risk associated with it. You're in a steady decline. Overall, the stock is not favorable. Give me 1 second here. Is it? All right, glad to see those aren't working here today. Go ahead, take a look at the next one. Send, SEND. Not seeing that. BBIG. So BBIG, poor long-term potential, a lot of risk associated with it. On a short-term basis, you are still in a decline. Overall, it is not favorable. Same situation. It's a speculative play. There's a lot of other factors at play. Same situation as what we're seeing with GME as well. So Lemonade, poor long-term potential, a lot of risk associated with it. Steady decline on a short-term basis. Overall, stock is definitely not favorable right now. ISPD, not seeing that one there. LSPD maybe. LSPD. So LSPD, poor long-term potential, a lot of risk associated with it. You're in a steady free fall essentially right now. Overall, definitely not favorable. VRTX. VRTX, great long-term potential, less risk associated with it. You're in a really decent short-term uptrend, so overall stock is favorable. Also, while we're at it, if you guys are enjoying today's session, if you haven't already, make sure to smash that like button. Share this out if you're over on our Facebook page. If you're on our YouTube page, make sure to click that red subscribe button if you haven't already. All of that helps us out with the Facebook and YouTube algorithms and continues to help us grow this community that we've built over the last couple of years. So I appreciate it very much. If you're enjoying yourself here today, make sure to do those few quick things if you haven't already. All right, SQ. Looking at Square, good long-term potential, a little bit more risk than the average stock out there. Unfortunately, the timing is off. A lot of tech stocks have been getting hit pretty hard. Therefore, or actually not even just tech, more just in general, stocks that have more risk have seemed to be taking the brunt of this sell-off that we've noticed over the last few weeks. So just an observation that I've made, but safety is of the essence right now. And it seems like, the more riskier plays are the ones that are getting hit the hardest so far in this current market conditions. So yeah, steadily falling like a rock. Overall, right now, not favorable. Let's see. PLTR. We'll do a couple more here. So PLTR, poor long-term potential, a lot of risk associated with it. You're in a steady decline. Overall, definitely not favorable. LCID. Lucid, poor long-term potential, a lot of risk associated with it. However, you do have a short-term uptrend. So overall, even that short-term uptrend is not enough to offset the poor fundamentals of the stock. So the stock is not favorable overall still. TDIV. TDIV, ETF, therefore, focused on the RT. RT is above 1, so therefore, this ETF is favorable currently. And then we'll do one more, SBI. SBI, another ETF, so therefore your focus is on RT at 0.98. It is in a slight decline currently, so therefore it is not favorable. Now, last but not least, I want to just take a look. We talked about our stocks going into 2020 or 2022. Looking at the overall portfolio, first and foremost, here's our stocking stuffers for 2022. We can see the average RT is at 1.2, meaning the average or the overall portfolio is on the incline right now. Looking at it here, NUE is looking good, TSM is looking good, SIVB pulling back a little bit, but you have Bank of America, which has been talked about, O'Reilly, EXR, a lot of good names. Lucid's in there as my speculative play. But yeah, this is holding up right now, even with the current market conditions from what we've seen. The stocking stuffer list so far seems to be holding up decently well so far for 2022. So I'm glad to see that. Just want to do a quick little update for everybody out there. Make sure we follow along with that throughout the year here this year. All right, jumping back into the overview. Ooh, all right, markets are starting to turn around a little bit. Right now, we've gone from one tick into the red, now to one tick into the green. Therefore, the color guard is mildly bullish, and VectorVest advocates caution when buying stocks at this time. Caution doesn't mean go ahead, load up the portfolio. Just means, if you see a stock that really looks good, you've really been wanting to buy it, you may potentially pick it up, but be very cautious with your entry. Don't go load up your portfolio, maybe add a position, maybe two at most. Slowly step in rather than, diving headfirst into it. As we scroll down, all right, starting to see a change. So now we're seeing at green light in the price column showing up there. The primary wave is turned up. That's a positive sign. Looking at the advances declines, we're still close to that 1-to-1 ratio. We're not really that 2-to-1 that we prefer to see, but we were at 40% advances to 48% decliners. Now we're at about 47% stocks advancing and 43% of stocks declining. So we're starting to see the bulls coming back a little bit here so far. Looking at the major indices, the Dow is now up about 0.5%. NASDAQ coming back about half of where it was when we last looked at it. So down only about 0.5% rather than that full percentage point. S&P basically flat. Overall VectorVest composite also pretty flat for the time being. So that's going to do it for today. If you guys have any questions regarding what we covered here after today's session, feel free to give our support a call. They'd be glad to help you out. Also, don't forget, Glenn does have Trending Thursdays coming up at 2 p.m. over both on Facebook and on YouTube. So make sure to check that out. If you enjoyed today's session, Glenn is a fellow instructor with me, or that works here with me as well. Does a lot of great analysis, a lot of interesting topics that he covers. So if you're looking for the main headlines that are impacting the market, make sure to tune in at 2 p.m. as well. Come hang out with him, show him the support and love that you guys have shown me here today. All right, so that's going to do it here for us. Once again, thank you everybody for tuning in. If you've enjoyed yourself and you haven't already, smash that like button. Go ahead and do so. Head over to our YouTube page. Make sure you're subscribed there as well for amazing content that we come out with daily. Also, make sure I don't forget anything. I think that was it. I think I've covered everything so far for the day. Yeah, so on that note, it's been my pleasure being with you guys. I hope you all have a great rest of your day. Have a great weekend. Make sure to be here at 11 a.m. Eastern as we kick off our next live stream talking about the VectorVest Stock Advisory app. So until then, take care, adios, and toodles.